Okay, good afternoon, everybody. Welcome to the weekly take on the market. It is Friday, October 11th. It is 1:05 Pacific Standard Time. Market just closed. I will be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. The disclaimer, please take a moment to read this. I'm not licensed. Can't tell you what to buy, what to sell, what to hold, how many stocks you should own, et cetera, et cetera. All right, so we'll follow the same drill, overall market thoughts, industry groups, stocks to watch, quote of the week. And I haven't looked much at sentiment. I kind of go back and forth on it. The problem with sentiment is it only works, well, I don't say it only works, it works best, I should say, in a correction or a bear market. And since the market's in an uptrend or bull market, whatever you want to call it, it's not that interesting to me. But a couple of people I've been listening to have been talking about sentiment getting a bit extreme. So it's a more extreme, or I'm sorry, it's larger than it was, but I don't know if I'd consider it extreme. I find it interesting the neutral number, 30%, and very few bears. So the neutral number gives me clue that maybe like a lot of people, including myself, there's a lot of things I love about this market and a lot of things that make me nervous. So maybe I guess if you were to give me this poll, I think I'd have to vote bullish, but if you gave me a second vote, it would definitely be neutral. So it looks like people out there are seeing some things that have created some uncertainty for them. This was interesting. I heard a guy on a podcast, Owen Lamont, I believe his name was. Yeah, Owen Lamont. And he talked about Yale has a sentiment indicators. I had never heard of this. So very interesting. Went on their website, som.yale.edu. You could find it. And he was talking about this confidence index. And it looks like it came out for institutions, I think, after the 87 crash. They were curious about what the institutions thought. But then although that line is so straight, maybe they just didn't poll individuals so often till later in the 2000s. But you could see as the market went up, the individual confidence went up. And as far as market confidence, and this looks like it works fairly well, kind of the opposite way too. Like the institutions weren't all that confident in the market in like the late 90s, like 99, and they were sort of right, but the market soared and forced them to become more confident right into the top. And you could see that red peak. The red is individuals, although it's not as high as like the 2000 peak, the late 2000s, or I'm sorry, the early 2000s, 2001, 2002-ish. It is the highest it's been in a while. Basically, I guess I could have drawn a line on here. It peaked out recently at the highest since the 09 bull market. So people are noticing that it's a good market, and that breeds confidence in that regard. They have a couple of other indicators on here. I'm going to explore that side a little bit more this weekend just to kind of see, but this looks like it could be very good again for we get into a bear market, finding that extreme as far as sentiment to the downside. Speaking of bull and bear markets, Street Smarts by Market Lab is a Substack that I get, one of many Substacks, probably too many. It's hard for me to read them all. But I really liked this screen grab that, and since 1978, S&P has been a bull market 85% of the time. I didn't dig into what he considered a bull market, but the main point I want to make is that I guess anything could happen, but as a general rule, the market goes up, and you should almost always, I guess, err on the side of giving the market the benefit of the doubt. Now, as somebody who started in the business in 1995 and witnessed the dot-com crash. And then when that turn finally came out of that and everything started to look great for a number of years, and we had the great financial crisis, I tend to err on the opposite. So this is a great chart for me. When in doubt, be bullish, I guess, is the best strategy. Or you don't have to be all or none. A lot of times, if I like something, I think it can be a short. I have a single short now. I can have 8 longs in a single short. There's no reason that way, and vice versa. If I think the market's going down, I could be short 3 names, but long one that I think is acting better. So, but in the end, this is a great chart to give you an idea on where the money's made. I have made the tiny. David Ryan talked about this either on IBD Live at Founders Club and Mark Minervini, I think, has said the same thing, and I think Bill has said the same thing. Like 98.5% of their wealth has been generated on the long side, and that's probably the case for almost all traders. So there's a great short seller named Robert Wilson, and he wrote I don't know if he wrote the book or somebody wrote the book about him. I read it. And even I didn't realize, because he is a very, very famous short seller, that he would be long too, but he'd be short against his longs, which helped him to stay the course. And he even said most of his wealth had been generated on the long side. So keep this in mind. And this is again, I like to build these videos for myself sometimes too. And so keep this in mind that in general, the market goes up. Now, when it goes down, it goes down a lot. That's what keeps us kind of fearful and hesitant about not having rules to protect you the downside, at least for me. All right, so let's jump into the indexes. And let's start with the S&P, because I think that's the best index at this time. And it made a new high a number of weeks ago. It was just trudging right along, acting fine. Like I said, they had a chance to get the market here, couldn't. They had a very brief chance to get it here and couldn't. It just feels like the market wants to go up. I feel like we're going to have some kind of a leg like that. Now, I didn't do the math on that, but what kind of leg is that? 10% or something. So 5,500 times, let's just do 8%. That puts you at 59.40. We're at what, 58.15. So 55. What if you take the leg from 56.69 and times it by 10%? You get 6,200. So you get the idea. It just feels like the market's in an uptrend, and there's a lot of and I apologize. It looked like I got a message that my screen was paused, so I don't know if you saw that. Let me repeat that just in case. So you get a low uptrend here, and I think we might have something like that. And what is that? 8 or 10%. So 56.60 times. Let's split the difference. Let's go 9%. That puts you around 6,200. S&P is around 5,800. That's kind of what I think. But I mentioned earlier that they had a chance to get the market here, couldn't. They had a chance here very briefly, couldn't. And so it just feels like the market wants to go up. NASDAQ. And let me turn my camera off too, so that we can. So the NASDAQ is the fly in the ointment. I still think it's going to go higher, but boy, it's going up begrudgingly, as evidenced by the relative strength. So here's the last high it made, and that was the relative strength there, the RS line, I should say. And here we are within a stone's throw of that. What's that? 300 points. That's just kind of one really good day in the NASDAQ, or two pretty good days. And the relative strength line is there. So you can see this is a wide gap, and that bothers me. So, and I feel like the best areas have been outside that kind of NASDAQ area, and we'll go through the charts. So maybe the market's broadening out. That's possible, or it is. But in the end, you really need the NASDAQ to participate. So like a friend of mine who trades on divergences, he has the market in a negative divergence. Now he won't get short because he prefers to short below the 200-day. Like he says, all the bad things happen below the 200-day. So he will wait and wait and wait because he's really looking to be short. He wants like a bear market, like a really bad bear market, because he just doesn't participate on the short side like that unless it's really bad. So but he has what he calls a negative divergence. So you've got the S&P in new high and you got the NASDAQ not. So I keep that in the back of my mind as well. You had China go ballistic to the upside. So risk is just completely on, although it is China and had been beaten up. Like you look at the weekly or the monthly, just way off the highs. But while China went up 40%, the NASDAQ basically did nothing. So it just feels a little waterlogged and heavy, the NASDAQ does. And so most of my longs, I'm trying to think if there's something that would be, and they're all kind of influenced by the correlations are super high for sure, but most of my longs are outside that realm of NASDAQ, like NVIDIA. I don't own NVIDIA. We'll talk about NVIDIA, of course, but like that would be like, super influenced by the NASDAQ. Now, is that the tail wagging the dog or the other way around? Who knows? But that would definitely be like NASDAQ influence. So that bothers me. I need, or for me to get more bullish and more risk on, really want that NASDAQ to participate, kind of make a new high. So I'm watching that as that divergence. If the S&P were to do something like this and come back below these highs, and especially if the NASDAQ doesn't make a new high or barely peeks its head up there and starts to do that, then I am of the humble opinion, right or wrong, that we will get a much worse correction in that scenario, because everybody has learned that you don't sell. They're fake outs. So this will be the third time. I have a feeling it won't be a fake out. It'll go down. You'll get a standard, 18, 25% correction, something like that. Now, what do I do about that at this very moment? Absolutely nothing. But this is just like me thinking out loud, trying to gameplay, what's going on in the market and how I might consider my positioning if that were to happen. I want to kind of have a plan if that were to happen. So I did talk about China. I just don't know how you trade this. Like boy, it sure is fun when you're long it, but man, if you're long it on the way up, but when you're long it on the way down, I just don't know. So it's just way too gappy for my blood at this age. So it's just a total pass for me now. I don't own anything China. I think I was short BABA for one day, literally like a day. I did not want the risk overnight of being in it because of the way it gaps. And I think, yeah, it was this day. And I covered it basically near the close, and you can see why. The next day it was up 5 and went on to run. So that's China. Metals, gold. Boy, it sure is holding up fairly well. So I don't own any gold or gold stocks, but I cannot argue with that. Silver had a little head fake. That's kind of what silver does, probably. They had head fakes. But trying to right itself. A pretty good day or two. So I have no exposure there. I don't know what to make of that. Copper is very interesting to me. Here's the copper index. You have the little trend line here. And I was just reading about copper and the amount of copper that it would take to go into all these data centers that we're allegedly going to build. And this is the whole AI thing, the kind of next level, the energy / data centers. A data center, a single data center can contain up to 2,000 tons of copper. And there was a great chart I saw where data centers, like if you amount of energy that like transportation and electricity and housing, et cetera, takes, and data centers, it was like a staggered graph, and data centers are right at the top. They just take up so much energy. So if we're really going to have all this data going, running 24/7, energy is a must, and it just cannot be done without copper. So I find it interesting that it's in this cup with handle. So you have a long, long, long base, and then this cup with handle. So if it were to go, I think I would buy this. If not this, I would buy the copper futures probably. But I'm waiting. But you also have, and I can get into the stocks later, but there are other stocks you could consider as well. But this is very interesting to me that it's setting up in like this kind of cup with handle. And last time it broke out, it ran a long way, 24 to 31, 7 on 24, 25%, something like that. So I guess maybe it could make a big move. What else is out there as far as indexes? I haven't looked at the Russell in a while. What's that doing? It's building a base. Shocker. There's nothing but build bases. Not my favorite index. And then I guess the Dow Jones, we got to consider that one. Let me just do diamond. New high. Not too shabby. So market seems fine. There's things to worry about, but I guess there are always things to worry about. Let's go to the industry groups. Telecom infrastructure. I was going through that group, but I didn't see too many compelling stocks. So telecom fiber optics is out there, but so stocks and group, Sienna. So I tried Sienna. I can't remember why, but there was one fund manager I follow who was bullish on Sienna and Coherent, and I remember reading his thesis and thinking it made total sense. And Coherent's been a great one. It's just been difficult. Like I think I was buying somewhere, maybe even here. Yeah, so you had to endure this space, you had to endure this space, but this time it's really, really working. But I haven't been in Sienna in a while, but it looks like it's acting really well. Oil and gas royalty trust, energy alternative other, insurance stocks have been good. Steel specialty alloys, very interesting. There are not that many stocks in there. Beverages, non-alcoholic, computer software, financial, building heavy construction, very good group strength, sector strength in that building area. There's a lot of is it PRIM, Primora? I'll pull that one up. EME looks good. Utility electric power. So pretty broad, pretty diverse. Banks Northeast, geez. So there's lots of stuff to consider from a group standpoint. All right, so let's get into the stocks, and we'll start with the big boys. So NVIDIA, it's kind of wedging up a little bit. I did buy what I thought maybe was that handle, and I'll be honest with you, I just cannot. I don't know what it is. I just can't hold NVIDIA very well. There's just the problem for me with NVIDIA is that it's just all everywhere. It's all over Twitter. It's all over TV. It's all everywhere. Everybody's all bulled up on NVIDIA, and I'm just a natural contrarian, and I just have a hard time. So I took a couple of points in it, and it's higher, of course, but I'm gonna live. I'm gonna live with it. It could. I wanted to be in it because I'm like, man, could this really get going like a really climax type run? And one thing you can do is like go back to like 2000 and study like the really big, strong, big ones and how did they top? It doesn't have to happen this way, but you kind of get an idea on how they top. And the really big ones tend to top with failed breakouts. See how Intel broke out, went down, then tried to right itself, and then that was that. This is let's go to December of 2000. If you go to Cisco, and I think I've done this before. So I don't know. I mean, I would call that maybe a breakout of a flat base. One thing about Cisco, it never really built too many bases. It's kind of a tough stock to trade. You just had to hold it. And you can see how it tried to run up, and then that was that. Sun Micro, we not in the database anymore, but very, very similar. Um, JDS Uniphase, I cannot remember the name of the company anymore. What is JDS Uniphase? Um, it's oh, Viavi, that's right. VIAV. So you see how it kind of broke out, failed, bad break, tries to rally, and then that's that. So they really don't, besides like Qualcomm, they don't really end in a blaze of glory. They end with breaking out of a base and failing. Like this is a blaze of glory. Or who knows, you could have said, oh, this is a breakout that failed like that. So Microsoft, so breakout, rolls over, breaks out, fails. So that's kind of what would happen. So if you're in NVIDIA, which, I think what you could do, what probably would happen is break out and then fail and then come back up. And then if that's the top, and that's kind of why I wanted to be in it. So I don't know. I don't know how to play the NVIDIA. Like I marked on the chart. I'll tell you, like my markups I just added to the chart. I guess I should add this to the weekly because the daily it'll move backwards. I'll lose it. But Jensen Huang was on CNBC on, I don't know if it was yesterday, the day before, but he kind of crashed I don't watch CNBC. I just saw the video on Twitter. And Becky Quick says, we have a superstar in the house. And then I can't remember the other guy's name, Andrew something. He says, we have the most successful company in America today. And I just can't stay long something when they were just slobbering all over uh, a CEO of a stock. Now, he's done an amazing job. I mean, it is what it is. The guy deserves all the praise in the world, but it just feels a little long in the tooth for me when I see stuff like that, because I've witnessed how that, but it doesn't mean it can't go from 140 to 160 and then back to 140. So that's the hard part about it. Anyways, enough on NVIDIA. Let's go to Tesla. So this is a stock I am short Tesla. They had their thing yesterday. And it's kind of funny and ironic because I watched the event and I was short the stock and I'm watching the event and I'm like, this isn't that bad. I don't have any problem with that car. It looks kind of futuristic, but it is only a two-seater. So as far as like a taxi, I guess you could get, if you had a family of four, you'd get another one. The bus one looked a little futuristic, looked like it belonged in a Star Wars movie, but it's all about functionality. The robots, I just cannot get over the robots, but at least they were a little bit more functional now. I just can't see paying $30,000 for a robot that's going to water my house plants. So in the end, I didn't find it all that negative, and so I was actually really shocked at how bad the stock was. I thought the stock would be down a little bit, but I did not expect it to be down, 20 points, 8-9%. So it looks like now this might still turn out to be a cup with handle, but that handle is super deep. You're looking at around 20% now. And so I don't know. I don't know what, I guess I can, I'm speaking, voting with my money, and I think it's going down. And so because I'm short it, but I don't have a ton of conviction because I think the market's going up too. And so, but again, back to my thesis is, why can't I be long 8 stocks and short 1? And if I'm wrong on Tesla, no problem. Hopefully I'll be right on 7 of the 8 stocks I'm long on. Apple looks fine. I just don't see a lot of upside in it. The relative strength's trailing off. Microsoft, Wow. Wow. I didn't expect that. I haven't looked at Microsoft in a while, but you see how relative strength works, right? What's the market done? I mean, the last time, let's go to weekly. So the last time the relative strength of this was this low, the stock was, gosh, 300. So this is really struggling, Microsoft. Meta, I think, yeah, if you force me to be long one of these FANG stocks, I think it'd be Meta with Nvidia a close second. What else is in that group? That we want Amazon, just very Apple-like. So the index, well, the FANG U index. So this could turn out still. It's not perfect because you have this kind of spike right in here. I think technically it shouldn't do that if is a perfect head and shoulders, but it could turn out to be like that. But this is a 3 times ETF, so I don't know how valid some of the chart actions going to be. But it doesn't, yeah, it doesn't look again, I don't know. I mean, it looks a little wedgy. You could kind of see what you want to see. If I was long it looks strong. If I wanted to be shorted, I could say, well, it's wedgy. I just think it's just a total avoid, a pass. But I do watch it for just try to see where the money is flowing. Um, all right. So that's kind of the big boys. Let's look at like second tier stocks like VRT, acting great, really deep base, but so far, if you bought it, you're up 8%. And it just in that sweet spot of the market, data centers. Um, MSTR. Now, I'm not long this one, but boy, what a great stock this is. Whatever they're doing, they seem to be doing it right. So nice little breakout. I would have bet that this would be the high for many moons to come, and been very wrong. Very much like SMCI. Like to me, this is the high for many moons to come. And MicroStrategy righted itself. So if you're in that one, congrats. It's acting great. Oh, so on the copper side, you have SCCO. I think you could buy something like that. You have FCX. Not in either one of these. They're going to look very similar, like that, or the CPER, which is the ETF. ALAB. Gosh, messed this one up. So you see this, my trend line went off. It did what I wanted, undercut that low and then turned back up. I should have been a buyer somewhere in there. Because to me, once you undercut this low, it just is just really good shakeout action. You're just not going to have any convicted people left in the stock at that point. So I messed this one up, but this is acting really good in the short term. And if it's real, if this company's real, if what they're doing is real, the earnings and sales are really strong, it could go a long way. And so it could just be the beginning. So ideally, it will build some kind of base. Palantir, PLTR, great stock, acting great. I do hear this name a lot from people that are in this one. That's definite leadership. Kava, leadership, doing nothing wrong. So there's a lot. So I've got a restaurant, I've got Palantir, ALAB. What about Hood? Robinhood? I don't know. Again, I'm going to let my bias get in the way. I don't love the company, but a lot of people do, and the stock is acting accordingly. So not something I've owned, but very. I think if you look at like ALAB, yeah, it's kind of what IPOs do. It's a lot of them. They'll go public, they'll bust. Some of them don't come back, but the ones that come back, they've really righted themselves, and by surviving, they really show the strength of their business. So these are good names to consider. Some of them don't come back. I was looking at Noodles. You can't quite see it, but IPO goes down, doesn't come back. I guess they're going out of business. What was the other? Oh, Figs. FIGS was supposed to be the next great one, and it's on the precipice here. Goes public. Now, if it can right itself in the future, sure, but it just doesn't look like that's a possibility here. And this just goes to show you why I think, fortunately or unfortunately, 99% of stocks need to be sold. The Apples, the Amazons, the Googles, the Nvidias of the world are few and far between. You get a hold of one of those, if you knew beforehand, I'd say amazing, congratulations. Otherwise, I just think it's luck. Now, that doesn't mean you don't buy 25 great companies and one of them turns out to be Nvidia, and 20 of them turn out to be total duds, and 4 of them turn out to be pretty good. And guess what? The one Nvidia and the 4 pretty goods can overwhelm the ones you lost in, because the ones that go up, you're making more and more money on the ones that go up, and they become a greater percentage of your portfolio, and the ones that go down are becoming less and less of a percentage of your portfolio as long as you don't add to them. So nothing wrong with that strategy. I'm just not very good at it psychologically, because you got to be wrong a lot. In the building, did I say, is it PRIM? Is that the one? Yeah, Primoris Services. So all-time highs, EME, nothing wrong with that. And the chart's a little sloppy. Like, this is tough for me to, but that just seems like what stocks do now. So this is a great company. In the data space, BWXT, you got the Ant, breaks out. They build nuclear components for U.S. government utilities. Could be a sweet spot. Now, I don't know if it's going to run away and hide, but if that whole area gets legs, this could be long-term idea for people that do that. VST and CEG. So they had a nasty shakeout. They gapped down this morning. I couldn't figure out what the news was. They were actually down last night in after hours, like pretty significantly, like 3 or 4 points each, VST and CEG. And I couldn't find out why. So this morning it felt like just a shakeout. So I bought CEG and VST this morning, and they both hammered, which is really nice. So I've got a bit of a cushion, and I'll probably use some kind of stop there or maybe lower. But I like this area. To me, this is the very picks and shovel like for AI. They won't have the same earnings and margins, and they're not going to make it the same amount of money that say an Nvidia or an A-Lab might, but just seem more logical that the spigot will stay on for quarter after quarter after quarter for companies like this. Now, as a trader, what does that mean for me? I don't know, but I like to think I might trade it, but where are the institutions thinking 6, 12, 36 months out, 5 years out? Where are they thinking? Like, what would an institution, if I was running a mutual fund, what would I think about a company like this? So I can tag along with them. I did show COHR is acting great. I'm on the sidelines of it, unfortunately, but I messed this one up. I got out too soon. On the energy side, you have CNX. Talked about an IB Live right there. I don't know why I didn't buy it. If I had bought it, honestly, I'd be a seller today. If not all of it, I would be a seller of some of it. But natural gas out different area. KMI acting great. I think I talked about this last week, right? The RS was 82. The whole David Tepper thing. I don't care. This is why I don't care. Stock was going up. I want to buy it. Did I know I was going to do that? No, but it just looked really strong. What else? Delimited acting great. It feels a little bit extended. I'm looking for, and eventually I'm hoping I'll get it, but where it meets that 10-week line. Or it shakes out below it like it did here. And then I'll increase my position to full throttle. GGAL, I do own this one. Like Argentinian bank, acting great. I think that's it. Apollo and Blackstone are interesting. These could be canaries in the coal mine if you worry about like the whole private equity bubble allegedly. Well, if it's a bubble and it's going to blow up, these stocks are going to get hit. That's why I had this trend line drawn, because I want to watch them in case that were to happen. So these are like I think I just already said it, canaries in the coal mine as far as something, if the market were to get something to be potentially wrong. All right, I think that's it. So as far as stocks, there's a lot of them. There's a lot of stocks out there. A lot to consider. You can have, I can see where somebody might have 10, 12, 16 stocks. There's a lot of possibilities, and there's plenty of others I didn't even mention. The quote of the week. The author, Rolf Dobelli, I don't hope I didn't mispronounce his name, but he has, well, he might have more than two books, but the books I really like that he wrote, The Art of Thinking Clearly and The Art of the Good Life, very kind of behavioral finance, psychology type books. I really liked, I think I've read this book 2-3 times, so whatever that's worth. But he says rational decision making requires you to forget about the costs incurred to date. I think about that like with when I sell something wrong, like a coherent. It doesn't matter if I sold it wrong. Get back in if there's a spot. No matter how much you've already invested, only your assessment of the future costs and benefits count, right? The whole, you've heard of the sunk cost fallacy. A lot of people will say, well, I've already done this, therefore I have to continue. So a great analogy I would be like you go to Disneyland and you bought a non-refundable ticket, and it's pouring rain, absolutely pouring rain, but you're going to go anyways, and you're going to be miserable. You have to say, it doesn't matter that I have that ticket already. Would I go to Disneyland at this very moment if the doors were wide open? Would I just walk in and enjoy the day? And if the answer is no, then you should just go home. Don't go. The ticket is gone. That's over. Think about the future. So when you think about making decisions in the market, you got to have to learn to forget about the mistakes you made. One thing about being in the business a long time, you develop a lot of experience, but some of that experience is negative experience. So you have to learn to forget about that negative experience. That's why a lot of times people that start out in the market, I find that they always, not always, but most people they start out really well because they're not afraid. They don't have any of that negative experience. And then somewhere along the line, they'll develop, it's inevitable, but you'll have a negative experience. And then that's where they kind of go off the rails because they have a hard time forgetting about that. So Jim Rogers used to say, in a bull market, you want to be 28 years old. And I think about that saying a lot because I was 28 years old in 1998. So I was perfect age in a massive bull market, 95 to 2000. And I saw that at O'Neill with some of the quote unquote kids come in like the 2015, 2016, 2017 bull market. And they were probably 28 and doing super well because they didn't have that fear. So it's you can't ever get rid of it, but you have to kind of set it aside and just focus on what am I going to do going forward? I can't fix that error. I can't go back. Scott O'Neill had a great saying. He would say, "Don't allow one mistake to morph into a second mistake." And I can't recall exactly how he would say that, but the idea is, you make a mistake, fix it. Don't let it become a second mistake because you don't want to acknowledge the first mistake. All right, so here's our contact information today. I think I'll be back next week. 800-831-2525, market surge at investors.com. It's crazy, though. Year is flying by. It's already October. It'll be November before we know it, and it'll be December. It's amazing how fast the year can go by. thank you for all your feedback you guys get. We really appreciate it, or give, I should say. And have a great weekend, and we'll talk to you next week. Bye, everyone.